Hello, friends. Hello, and welcome to Network FP Success Talks, where you meet and learn from the leaders of personal finance profession. Friends, I'm your host, Sadik Nilgund, and with us we have our guest, Mr. Vinod Jain, founder of Jain Privy Client from Mumbai, managing over 2,700 crores of assets for 10,000 plus families with a team of around 85 plus including employees and partners based out of Mumbai. Welcome, Vinod, to the show.
Good morning, Sadiq. Good morning, everyone.
Good morning. Good morning. Vinod, great to have you. We have had you earlier also in many other talks and the events of Network FB. Good to have you after a long time. Vinod, my first question, it's been 23 years. You started in the year 2001. A lot of ups and downs you've seen in the market, in the profession, in the industry. What are the key milestones which you have gone through in the last 23 years? And what are some of the major decisions which you took, which seemed risky but has been worthwhile in this journey of 23 years?
So I think it was very exciting journey for me personally, very enriching. I started in 2001. I worked with National Stock Exchange and Birla Sun Life, but I just decided to go on my own. And I started this firm in 2001. 23 years have been exciting because I was very introvert by nature, but I got a chance to open up and start talking to people in this journey. There were many milestones in between. When I started with a simple idea that can I take 20, 30 people towards their financial goals, make them meet those financial goals like retirement, child education. That was my simple idea of starting the practice. But I never knew that there are 10,000 family which got attached to the setup, and we've been dealing with a lot of them for last 20 years. There were milestone of 100 crore, 500 crore. We achieved 100 crore in 2007. At that time, the team was around 14, 15 people. 500 crore came in around 2015. What I believe that investment management practice, for in every up cycle you add 1 0 to your your assets. So if you're managing, say, anybody who's managing 100 crore, in the next cycle he'll be managing 1,000 crore, and the next to next cycle they'll be managing 10,000 crores. So you have to be there, you have to hang on, and I think every cycle is rewarding, and every cycle add a 0 to your assets. Uh, and
Every
the key
cycle adds a
decision,
zero.
to answer your second question, any decision which I took, and I feel that that was a good decision in the interest of the organization, was to set up the IT's company in 2015. Uh,
Mm-hmm.
when in 2015, when we touched 500 crore, and number of clients were increasing, I believe that we should have our own setup, which actually does infra IT for us, not for anybody else. And we now have 6 to 7 seater based out of Belapur, headed by a person who has the industry experience of 20 years. In fact, he has the credit of making the uh, first software for mutual fund distribution. And he's heading that setup, and he's actually automating all the functions for the organization. So that rewarded, because that allowed us to scale and think slightly bigger in terms of servicing more clients and managing more assets.
Your own IT setup. That's a big
Yes.
one. That's a big
Yeah.
one. If you have to see the, from the fraternity, not many people have that setup, but you invested in that. So, Vinod, you are also a chartered accountant, and there is always a debate in our own fraternity that are chartered accountant the right people to go for personal finance advice. How do you see this particular point of what is your view on this? Do chartered accountants make good financial advisors, and what is your advice to the aspiring chartered accountants who want to get into the field, which we are seeing many of them are trying to get into now?
So I think most of the chartered accountant practice in the area of maybe tax filing, auditing. In those areas the principles are very well laid out. You know that this is what we have to do. These are step one, step two, step three. But when it comes to investment practice, it is more emotional, interpersonal. you have to talk to people, you have to understand them, and there are fears in many of us chartered accountant, that what if the client loses money, how will I answer them? I think my only admission to them is that if you are not doing it, somebody else is doing it.
Correct.
If we train ourselves to handle their emotions, we train ourselves to handle their money, and most of the clients end up trusting the chartered accountant for those decisions. So I would say there is a great opportunity in terms of client trusting us. If we can cope up with handling them emotionally, at the same time learning the uh, nuances of managing money, I think there is a great scope. And there are many fellow chartered accountant who started this practice, and I think they are doing exceedingly well. Most of them are doing exceedingly well. It is very, very rewarding. Your wallet share per client actually goes up, and it is very enriching. So I think it creates scale for the chartered accountant practice also. So I would say that everybody who is actually practicing should get rid of that fear that अगर client का पैसा डूब गया तो मैं क्या answer दूंगा. I think we if we may apply simple principle, I think we can do it. It is not such a great difficulty.
In fact, Vinod, our own chartered accountant who manages our company's accounts has now joined QPFE certification program, and that prompted me to ask you this question. But let me extend this question: what you learn in chartered accountancy as a CA, do those skill sets and knowledge base actually help you to be a good financial advisor and distributor, or it's a different level of skills and knowledge which you need to acquire to be a good advisor?
No, I think there are certain aspect like taxation. Those are really useful in managing money, because ultimately it is post tax return, and advising on taxation is also very, very important. So that comes naturally for the chartered accountant, but I think it's a very vast and different subject altogether. A chartered accountant just passing out will have to learn a lot of things to actually become a good financial a distributor or advisor, and then end up advising the client. So it is not going to come naturally to them. I think they'll have to learn a lot of things, but this taxation gives a great advantage. So if somebody is good in interpersonal skill, and if he can learn the taxation, he can do the otherwise also. And now chartered accountant learning the other aspect can also make a good advice. But chartered accountant advantage is, a lot of people will come to them for the basic work like tax, tax filing and everything, and they can use this opportunity to get into the other aspect of the practice also.
Absolutely. The trust is already in place, the client base in place, is just fixing the plugs in together. As you grow in 23 years, and we have seen many other financial advisors grow their practice, there are two ways to grow: either through employees or through partners. And some of you have taken the chosen to take the route of partners, and many others have taken the route of adding more employees. Now, out of your 85 team members, 50 of them are partners actually, where you are actually sharing them a revenue of what they earn, and then you get into a revenue sharing arrangement and you provide a set of facilities to them. So what, according to you, are the major differences between these two pathways? If you were to advise a senior practitioner or a growing practitioner, okay, should I choose an employee growth model or a partner growth model? What are the differences, and what would be your advice?
So Sadiq, a very good question, and I in fact, I have the fortune of dealing with both the model. I started with the employee model, ended up with the partner model. There are employee model is basically, it's very easy to get people on board, and you can always give them they will get a fixed salary, and they can stay in the system for a long time. With partner model, the difficulty is because they don't have any revenue to bank upon, it is very difficult to start the practice, take that leap of faith and start. But I started as an employee. There are certain incentive disadvantage when it comes to employee model, because there is no skin in the game. He is coming there, there are no incentive for set to grow, or clients to reach their financial goals, and he just has to execute daily work. But the moment we changed it to partner model, there was a win-win-win. whenever a client, whenever RM or somebody partner met a client, and he is actually building asset for him to meet his financial goal. So when the asset is growing, his income is also growing, organization income is also growing, and there is a direct incentive for them to grow together. And that's where we found. So we started this partnership model in 2008 2009, after the entry load went away. And we were the early one to start, because
Oh,
the financial uh, at that time we used to be called IFA, and nobody was actually experimenting with this. But we took that faith that the entry load has gone away, and everything now depends on the asset you manage. So your income should also be linked to asset you manage. And
mm-hmm.
started there with one person. Today each and everyone is actually on that model. uh,
Oh,
Whoever
okay.
actually deals with client is on that model, and the entire, so we can say that our total cost, almost 80% of the cost is variable. Okay, so
80%. Yes, because
80%
it's a partner model.
variable, and there is great incentive for everyone to come in the office, act as entrepreneurs and build their practice. So I would say that all these models globally also, whether you go to a chartered accountant practice also, it is similar. Like everybody's, any partner who is with the big four or anyone, there are incentives to grow the practice, because these incentives are aligned to growth of the practice. So I think there is definite scale in the partnership model.
Lovely. Now, the biggest problem with partner model is, the revenue share, right? Many people think, why should I share revenues with somebody else because I'm getting the clients? Now, you have cracked it really very well. And ultimately, the partners share up to around 40 to 50% of the revenues with you for providing a set of services or set of infrastructure. So, what is it that you really provide to tell them, look, instead of being on your own and doing it on your own, why don't you join me and do the business and do the practice under my umbrella? So what is the value proposition from Jain Investments or Jain Private Wealth to these partners?
So I would say that I was not sharing the revenue to them. I was actually sharing the cost with them. I
Okay.
was the independent advisor. I wanted to grow. I wanted to have a very high-end technology in my office. I wanted to have high-end, research in office, and to actually facilitate that, I needed a lot of cost, right? And if I'm doing alone, I will not be able to afford those costs. So I
Hmm.
want people around with me who can come with me, all of us can actually work together, earn revenue together, and then share the cost. So I think that the idea was to share the cost rather than share the revenue. Today on the same system, 50 people are actually working together, including me. I am also advisor, and 50 people are actually working together and sharing the cost. So there is a common research, there is a common IT company, there is a common we could afford a head of operation, we could afford in the various department, we could man with experienced people. Individually, I think I was unable to do that. So
Hmm.
the idea was that if I'm going to incur so much of cost, I need people who can share the cost with me. And the reverse is that we are sharing the revenue.
Yeah.
So there are certain costs which we have common, and there are certain profit which remains at the organization level to pursue the future goals.
This is an interesting way to put it, Vinod. Generally, so you are saying that, look, I'm not above you. I'm just another partner, and because there are so many costs of running the business, the practice, let's come together and make sure that we are sharing resources and building our businesses and practices together.
True.
Very nice, very nice. Great, Vinod. Coming to your next phase, you grew as a independent advisor, distributor, then partners. Then you have gone on to become a product manufacturer now, right? Where you took a PMS license and you added 900 crores of assets in PMS. So why this transition? Because generally, mutual fund and being a financial advisor distributor is a great business in itself, is a full-time business in itself. But you took the leap of faith and have actually gone on to integrate the next level, which is becoming a product manufacturer yourself. So what is the commercial and non-commercial reason behind this, going up the ladder?
So the idea struck to us in 2010. The same time when we were experimenting with our partner model, we experimented with our PMS model also.
Mm-hmm.
Uh, we actually started practice in 2001. We were dealing with small SIP, small ticket SIP, and the client were very disciplined in actually saving regularly. But in the we saw that some of the clients have become bigger, and their aspiration to look at investment beyond mutual fund. So we said that we should be opening our eyes to newer things, newer way of investment. And the idea of 2010, the starting the PMS struck to us. At that time, it was far simpler because it was 5 lakh rupees minimum ticket. So
Correct.
we could get few clients who had 25, 30, 35 lakh rupees to invest 5 lakh rupees with us. And then in 2012 it became 25 lakh rupees. Still, by that time markets were slightly better, and 2012 25 lakh rupees also was not so difficult. It was difficult but not so difficult. But in and then later it became 50 lakh rupees. But what I personally felt, when the clients are becoming bigger, we need to create credible diversification opportunity for them. And if we are looking at 10 years ahead, we should be starting today. So 2010 was the start of the year with a belief that in next decade there will be clients who will become very, very big and they would look for opportunity. And today we have many clients who are 2 crores, 5 crores, 10 crores, 20 crores, 100 crores also, right? The size of the client is 100 crore. And most of these clients, so if I have to ask you that, if there is a suppose Wipro Trust, would they invest 100% into mutual fund, or they would look at diversification? So
Mm.
everybody who is going to grow in size will look for opportunities. And I
Diversification.
would request everyone to start investing their time in reading about it. They may not advise their clients, but they should be reading about it, because eventually the client will look for diversification. That's how we can make the client bigger with us, because we give them credible option in terms of diversification. uh, I think that was the idea which started. Like any SIP module, which can become 100 crore, 200 crore asset, even PMS can become. And case in point is our setup, where we could actually touch 900 crore by just being with our own set of clients. We have not explored, and we went and marketed our PMS to everyone. In fact, we don't have a third party distribution. We only deal with our own set of clients, and we actually advise our own set of clients. So the business can become big. We just have to make constant effort.
Very right. Now, PMS as a product has been gaining grounds. According to you, what is the right point in the journey of the investor where we have to pitch PMS when they are more acceptable to the idea of PMS, either in terms of their investable surplus or in their experience with investments? According to you, what is the right time to be pitch PMS?
So I think it will vary, but if we have to make a thumb rule, I think 1.5 2 crore rupees, 2 crore rupees is a good size for somebody to look at, 25% into a PMS allocation. So 50 lakhs he can always start with, and because his size will also grow from 2 to 4, 4 to 6, right? So that 50 lakh rupees will be a starting point for the PMS, and then he can actually look at it. But the idea is that don't one will have to actually do a lot of due diligence in terms of getting it right, because mutual fund is far more explored vehicle, have been there have been there for last 30 years. PMS is a lot more individualist. So you basically, one will have to do a lot of due diligence in terms of what they are offering to the clients, whether it is matching their requirements. So I would caution them that it is a good vehicle, but please do your homework before you approach the subject. And I think client size is 2 crore is where somebody can actually start looking at this as an option.
Correct. Just extending this question again, do you see a difference in the way stock investors and mutual fund investors behave? And is it a right idea for the mutual fund distributor to pitch stocks or PMS to the core mutual fund investor? And also, just a second question of this. And as mutual fund investors evolve, do you think they also tend to dabble in stocks whenever they get an opportunity and an authentic source of giving advice to them?
So I would say that stock investing has actually been been there before the mutual fund came into, the mutual fund became a credible option after 94 95. Stock investing is there since 1978. I met many investors who have invested, or their father invested in stocks in 1970s. I met one client who invested in 60s, right? And they have actually benefited by investing. So it is there for a long time. People have been investing for a long time. There are stocks which have been passed from generation to generation, and everybody like to be a stock investor. So I think there are stock investor. There are The mutual fund is a way of investing. So one cannot say that you have to shut the stock investing and only look at mutual fund investing. It's been there. I think there is a Lindy effect which is in work. It has been there for many years, and it will continue to be there for many years to come. So can we actually position ourselves in a way saying that if you are investing in stocks, why don't we actually come with you and find a right fund, a portfolio manager who can actually look at your stocks investing? I think, and that's where we found. So I'll tell you, in last out of the 900 crore, around 200 300 crore must be stock which have been invested in the past and became the part of PMS. So that is a different wallet altogether, which is available in the industry, but we'll have to position to get that wallet.
And what if the client is not high net worth of 2-3 crores? What is the alternative to take them to the stocks if they are hell-bent that I need to get into stocks? Is it the small caps, or is there any other way?
So I think that will be that is not such a robust structure. I think one will have to be very, very cautious. I I think like if I go to an international market, there are accredited investors who have a portfolio size, and then they can explore. So it will be very difficult for me to manage such a large scale where a small investor investing in small stocks, right? So then I will be actually spreading things. So we'll have to draw a line somewhere. So if you ask me as an advisor, I will draw a line saying that once you reach a critical mass, let's explore this opportunity. Let's not try to do it now. Let's build the assets and then do it, so that I will not spread thin. I will be focused with clients. I will grow them in size and then give them credible options.
Sure, got it. Now, also the client expectations, since you've been there for last 23 years now, and I remember having met you in your office, and you showed me, Sadiq, see my Excel sheet using which I get all the SIPs, right? It was a very simple Excel sheet जहाँ पे आप PV, FV डालते हो, कितना SIP होना चाहिए, and you show the client, okay, ये goal achieve करने के लिए itna SIP karo. It was so simple, right? And clients buy it when at the start of their journey. But how have you seen the clients evolve and have changes in their expectation with you as their advisor, distributor over a period of time? After 3 years, after 5 years, after 10 years, what are their expectations and how does it actually evolve?
So I would say that the exposure of the clients have increased because of the social media. But I would say the nature of the client doesn't change. So there are cycles, and when there are up cycles, clients become more demanding. When there are down cycles, they don't want to be in the cycle altogether. They want to go out. So I think that emotional cycle will always remain, and we will have to handle it. But if I ask that they there is a Dunning-Kruger effect, that everybody believes that I know a lot about the subject, and that may create some kind of difficulty when you are dealing with the clients. But I can still say that the expectation have not changed dramatically, especially when I am operating as an advisor. They know a lot more about subject, and they may ask few questions far more than what they were asking earlier. Today they will not ask a question on SIP. 20 years back they used to ask me a question, what is SIP? Today they know that what is SIP, but they will ask, why not index fund, why not international fund? Those kind of questions. So the questions are changing, nature is not changing. I think creating or hand holding them through cycle will remain the same. I don't see a very big difference in the way I operate, but I would say that as an advisor, what I've learned over last 20 years, to always bring down the expectation of the client, to set the expectation right. It allows them to stay long. If I keep the expectation high of the clients, then he will get disappointed in the journey and he'll actually check out. But if I keep the expectation low and focus on delivering far more than what you are set the expectation, and that allows the client to or the investor to remain long and make actual wealth. So that's what I have learned in last 20 years, to bring the expectation of the client lower.
Lovely. So questions change, but the nature and emotions will remain same.
Always.
Okay. Coming to your latest, initiative, and again, a leap of faith, we would say. You've been taking some really big, bold bets as a from independent advisor to becoming, not a ND, but still, you almost kind of set up a distribution model where you have partners now, and then the PMS. Now you also gone on to take the Gift City AIF. Okay, and you have also onboarded a fund manager from the AMC. I'm sure it's all this is big cost, and it's quite a lot of risk. So why these big bets and bold moves at this stage of your career and business?
So first of all, thanks to all my fellow, advisor or partners who actually allowed us to have this, leap of faith in terms of opening a gift city. So it is again a decade early kind of venture, because everybody talks about India is a great destination. It will become large. It will become third largest economy, and it will attract a lot of foreign capital. And I think we want to be part to it. We want to participate in it. So we want to start a decade early, build the model, build the maybe the fund and history of the fund before we can go and showcase it to the global investors. So the idea started with this, that there are a lot of incentives in gift cities to start the venture. We want to explore that. We want to set it up for next decade, build the history. We also want professional to come on board, because I alone or with my existing team is not in a place to actually execute this. So we want somebody who have seen the size. So two fund managers have come on board. Both are together manage more than 20,000 crore. So almost $3 billion they manage. So they have seen scale, size, and they have the execution capabilities. So we would like to be part to the global flows to India. At the same time, manage the Indian clients to invest in India and overseas at some point of time.
लवली. ये सब करने के लिए टाइम कैसे मिलता है सर आपको? So many initiatives and so many people managing, because many of us really struggle. Many of the financial advisors I really meet, they struggle with the time commitment, managing team, the clients. But you've gone on to a next level where you are like setting up businesses now, not really getting into just managing clients.
So Sadiq, I'll tell you, because the biggest time consuming activity in our practice is dealing with clients. And if we set the expectation right, we build a long-term relationship. The clients are they're very generous to leave you with some time. They will not unnecessarily bother you if they know that you are doing your job, and if you can win their trust. I think. I am fortunate to win the trust of many of our clients in terms of they don't bother. There are clients who are worth 20 crores, 30 crores, and we have met once in a year or once in 2 years. So they have given me enough time to do my own stuff and create opportunities for them over a period of time. So I would thank most of it to my clients who have given enough time for me to experiment with all these things.
Fantastic. Just extending this question, when we are managing an asset book of, let's say, 1 crore, 2 crore for a client, we earn anywhere between, let's say, 50,000 to 1 lakh rupees, either as commissions or fees, whichever ways, right? So what is the real expectation from this 50,000 to 1 lakh rupees that the clients are paying us through commissions or fees? Is it the returns, or is it the relationship, or is it the, just take care of money, I trust you? What is it that for which we are getting paid this 50,000 to 1 lakh, according to your understanding?
So I would summarize it in one word. It is confidence. I am paid for giving confidence to the clients that
Fantastic.
here I am. If we work together, we can reach our goals. Very confident. You will have enough money to take care of your all the needs. I think they look for confidence. They every time where they are feeling down, they are feeling nervous, they are feeling confused. They will call up and say that, are things okay? And I just have to say okay. I don't have to show that abhi 12% return hai. I just have to think things are okay, and we'll if you want to go to Kashmir, you can go to Kashmir. You want to go to Switzerland, you can go to Switzerland, or you want to take your child to study abroad, you can do that. That's what they want to hear. That's it. I think if you can stoke the confidence on a daily basis, whenever they require, I think the client is going to remain, because there are very few people who can give that confidence in your life. So
Fantastic.
everybody is searching for that, word of confidence from. So I am paid 100% for stoking confidence in their life.
कोई एक चाहिए जिंदगी में जो बोले हाँ सब ठीक है, सब ठीक होने
So
वाला है.
all is well.
All is well. Yeah. Now, Vinod, since you are a chartered accountant, I thought I'll do some maths with you, coming to the practice side. According to you, if somebody is having 100 crores of asset, what is the take-home income? We understand that 100 crores में, debt होता है, equity होता है, then there's GST, then there are expenses, office, 2-3 लोगों का team होता है. So what is the right expectation to have from 100 crore, income expectation to have from 100 crore asset book?
So I would go on and say that ideal size 100 crore book will have a person who is started the business, along with two people who assist them, and then maybe 3-4 people in operation to take care of it. So that will be the cost, and I think the revenue you can take around 70 to 80 basis points as the revenue if you mix liquid and equities, and all together 70-80 basis points after or pre GST, whatever. So I think mota moti, after taking out all the expenses, somebody can actually make 30-40 lakh rupees a year on a 100 crore book, and the book can grow at rate of 15-20% every year. So your
30 to 40 lakhs of income. So roughly around 3 lakhs and per month can be the right expectation from a 100 crore asset book which you build.
Correct.
All right, good. One last question, Vinod. What is this interesting story we hear about you teaching your daughters about investing? Their name is
Sasha and Tasha.
Sasha and Tasha, right? And are they twins by any chance? Or?
No, they are
no, right? The name
11 years gap.
11. Okay. So what's the story about this interesting story?
So my observation, and we keep hearing that if you invest and forget, you make highest wealth. And how do I teach them that you have to invest and forget? So first of all, we did a small thing that you invest right, then you can forget. If you invest wrong, if you forget the money also. Right? So we wanted to get few basic things right, and that's where this story came when Sasha was young, to buy a few companies which can remain for long term, which she can identify with. Maggie or something like that, and that's what she invested 5 lakh rupees. And my idea was that when she becomes 21, and she is 21 today.
Okay.
So 11 years back she started 5 lakh. Today it is 43 lakh rupees by investing in 5 simple companies, and the money remained for years. So now she understood that the power of investing long, and that's what I wanted to teach them. The idea was invest right and invest long, and you will create wealth, and all your needs will be taken care of. And my younger daughter is 11, and she's also invested in 5 lakh rupees now, a year back. And after 21, she will also learn the same thing.
Wow, this is fantastic. 5 lakhs at the age of 10, becoming 43 lakhs at the age of 21. Invest right and invest long term. That's it.
Yes, that's it.
Nothing more to this.
No, nothing more.
Wow, fantastic, Vinod. This was a truly enlightening and inspiring talk with you. So thanks a lot for joining in. Friends, how did we all like the learnings from this talk with Mr. Vinod Jain of Jain Privy Client? Can we all put in a word on the chat? What was your biggest takeaway from the session with Mr. Vinod Jain, the Success Talks with Vinod Jain? Awesome, Vinod sir. Confidence, excellent session, very inspiring. Dil se fantastic, high energy, beautiful, visionary, super session, extraordinary, confidence, nice, exceptional. Right invest, long investment, confidence, motivating, inspiring, inspiration. This is all for you, Vinod. Thanks a lot for joining us, sir.
Thank you very much.
Any final thoughts you have for our audience, and what do you think about network FA? मैं कपिल शर्मा शो काफी देखता हूँ, तो कपिल शर्मा का एक ये है कि वो खुद के शो पे खुद का थोड़ा तारीफ करवा लेता है. So what do you think about the network FP community?
No, no, you and you, along with your team is putting a lot of effort, and I think this profession has a very long journey ahead. I think a lot of people will get into this profession. So I think all the best to Network FP. I would like you all to enable most of them to the next level. So
Thank you,
keep
sir.
doing the good work. Keep doing the good work.
Thank you so much. Appreciate your time, sir. Thanks for
Thank
joining
you.
me.